Welcome to Goldstone Finvest. I'm Prabhat Majumdar. I would share today's market update. Monday, after 2 days of selling, the Indian benchmark indices ended marginally in green, which was supported by the PSU banks, metal and energy stocks. At close, Sensex was up 35 points at 50,441 levels, and Nifty gained 18 points at 14,956. Analysts researched that as expected, the market has been trading sideways all day. We were not able to get past 15,300 or break fiercely below 14,800. A trigger of either level will pave the way for the next move up or down. Until then, traders would be advised to trade cautiously with strict stops. Domestic markets pared its early gains, taking cues from weak Asian markets following US futures and rising oil prices. Oil and gas, PSU banks and metal stocks were the sectors in focus, inching broader market. Oil prices were parked near record highs following geopolitical issue in Gulf, while reports of the progress of PSU bank privatization tempered buying in PSUs. The Nifty remained highly volatile throughout the session and erased early gains to close marginally high on the first day of the week. Weak Asian peers and US futures and rising oil prices weighed on sentiment. The Nifty, with a gap up opening, broke out from a bullish wedge pattern on the hourly chart. However, it couldn't sustain above the 20-hour moving average. As a result, the index witnessed consolidation for yet another day. The daily chart shows that the index has broken out from a falling trend line and is forming a base above it. Also, a larger structure shows that trendline support is present on the downside. Thus, the short-term bullish outlook remains intact. On the higher side, the high of 15,111 becomes a key hurdle. Once that gets taken out, the index will be considered to have started a fresh move on the upside. On the downside, a crucial support zone is present near 14,860 to 14,800. Thus, detailed study indicated that the Nifty opened higher at 15,002 levels and hit an intraday high of 15,111 levels, but turned volatile and touched the day's low of 14,919 levels. The index finally settled with 18-point gains at 14,956. Looking at the index formed a small bearish candle on the daily chart as the closing was below opening levels. The consolidation is expected to continue till the Nifty breaks the critical hurdle of 15,273. Index opened the day with gains but unable to sustain on highs, and after showing good volatility, index closed the day at 14,959 with mild gains of 21 points. The index has formed a stiff resistance near 15,070, and if the index managed to cross above said levels, then some positive traction can be witnessed in the index and we may see a good move towards a good hurdle zone of 15,150 to 15,240 levels. The immediate support for Nifty is coming near 14,900 to 14,850 zone. Researchers suggested that the Nifty appears to be on a consolidation mode and trading session remained listless and volatile with a 190-point range. However, relatively longer upper shadows of the last 3 trading sessions with small and negligible candle bodies may be hitting at impending weakness, which shall be confirmed with a close below 14,862. In such a scenario, on weakness below 14,862, correction shall get accentuated with an initial target of 14,628 levels. Details were analyzed and it resulted that India VIX fell by almost 3%. It has remained in a broader range of almost 21 to 29 for the last 10 trading sessions. Looking at the options front, Maximum put open interest was seen at 14,000 followed by 14,500 strike, while maximum call open interest was at 16,000 followed by 15,500 strike. Call writing was seen at 15,600 then 15,500 strike, while put writing was seen at 15,000 then 14,500 strike. The options data suggested that a wider trading range for Nifty could be 14,500 to 15,500, while the immediate range could be between 14,750 and 15,250. Additionally, the Bank Nifty opened positive at 35,462, but after a volatile start, it moved in a consolidative manner. After moving in a high-low range, it concluded the day with gains of almost 47 points at 35,275. The index formed a bearish candle on the daily scale but negated its formation of lower highs, lower lows of the last two sessions. The Bank Nifty has to cross and hold above 35,500 to witness a bounce towards 36,000 and 36,250 levels, while on the downside support is seen at 35,000 and then 34,500 levels. Thus, towards the end of session, markets ended flat in a volatile trading session in line with the prevailing consolidation phase. The benchmark started the day on a firm note led by positive global cues. However, profit taking at higher levels, especially in the banking stocks, trimmed gains as the session progressed. Consequently, the Nifty settled at 14,956. The broader indices managed to outperform the benchmark as both mid-cap and small-cap ended higher by 0.3 and 0.6%. Amongst the sectors, a mixed trend was witnessed wherein telecom, auto and realty ended with losses, whereas IT, oil and gas, metals ended in the green. Except FMCG and auto, all the sectoral indices ended in the green, with energy and PSU bank benchmarks adding 1% each. Mid and small cap indices outperformed with gains of 0.3 to 0.6% each. On the BSE, the oil and gas, metal and capital goods indices rose 1% each, while realty index shed nearly 1%. What to expect tomorrow? Nifty has to cross and hold above 15,000 zones to witness an up move towards the 15,150 and 15,250 zones, while on the downside, immediate support exists at 14,800 then 14,700 levels. If the bulls manage to defend 14,900 on a closing basis, then they will continue to make efforts to breach the near-term critical hurdle of 15,273. In this regard, some strength and stability should be expected if the Nifty closes above 15,100 levels. View is positive on the auto sector with more positivity on PVs and CVs. 2W growth is flattening out while tractors may report a fall in FY22 on a super high base of FY21. PV's growth will be driven by new entrants, new launches, sentimental positives and personal mobility, while CVs will be driven by a surge in economic and industrial activities and low base of F1. As expected, the markets have been trading sideways all day. We were not being able to get past 15,300 or break fiercely below 14,800. A trigger of either level will pave the way for the next rally up or down. Until then, traders would be advised to trade cautiously with strict stops. As stated by Goldstone experts, traders should trade extremely cautiously with strict stop losses and should follow support and resistance levels on strict basis. Traders should remain neutral on the Nifty on the long side, whereas a shorting opportunity should be considered below 14,860. Follow support and resistance levels along with trading call as published on our Telegram channel. For regular updates, like, share and subscribe our YouTube and Telegram channel. Also follow us on Twitter and Instagram. Also be a part of our Facebook family. Views by Goldstone Finvest. Let's build fortune together.